If you're like me, 2025 has been a bit of a roller coaster for your investments, and I'm definitely feeling it. So today we're talking about how my portfolio performed in the first 3 months of the year, my best and worst performers, and also what stocks and funds I bought when I got paid this month. So grab a coffee or tea and let's dive into it. Before we get into the details of my portfolio, let's do a super quick recap of the broader market situation. It's been all about 3 T's this year: tariffs, tensions, and Trump. Tariffs have been rolled out left and right, and let's be honest, markets hate them. That's creating a lot of uncertainty right now. The fear is real. CNN's Fear and Greed Index shows extreme fear right now. It's been a bumpy ride with a lot of sharp drops. Okay, but we're not here for the doom and gloom of the market at large. Let's get into my portfolio and see how it's holding up. Honestly, it's been rough, but let's break it down and see the damage. So here's where things stand. My portfolio is down by 9.9% in the first 3 months of the year. Yeah, it's not great. From a 70% return at the start of February, I'm now sitting at 21%. And before anyone asks, that's just the money-weighted return that my investment provider calculates. This basically accounts for the fact that I've added money over the years. I didn't just start out with 60K or something. But still, it's a big drop. There's this saying in investing that stocks take the stairs up and the elevator down. And that feels quite true right now. To put this in context, the broader market has not been doing that much better. Global stocks are down by 4%, the S&P 500 is down by 8%, and the Nasdaq 100 has dropped over 11%. So yeah, my portfolio is taking a hit, but it's actually faring better than the Nasdaq. Usually my portfolio mirrors the tech-heavy Nasdaq, so I'll take that as a small win. Also, there's another silver lining. My biggest bright spot this quarter is Mercado Libre. Ticker symbol MELI, or MELI as I call it. It's the only stock in my portfolio that's in the green. Shares of Mercado Libre are up by 12% over the past 3 months. Now, if you're not familiar with it, Mercado Libre is often referred to as the Amazon and PayPal of Latin America. It's been firing on all cylinders, and despite all the global drama, it's delivered solid results. Mercado Libre's growth isn't just about e-commerce though. It's also got Mercado Pago, its digital payment platform, and a logistics network called Mercado Envios. Or Envios? Probably, I don't know. It's really following the Amazon model. Build a strong e-commerce business, become the leader in your region, and then layer on additional revenue streams like advertising or entertainment. Even with the economic challenges in Latin America, the company is in a really strong position. Honestly, this stock's been a lifeline for my portfolio this quarter. I definitely think Mercado Libre is one to watch for the rest of 2025. Let's just hope the market starts treating the rest of my stocks as kindly as it's treated Mercado Libre. Now, on to the bad news. When it comes to the biggest losers in my portfolio, there's one that really stands out. The Trade Desk ticker symbol TTD. Unfortunately, this company's been hit hard by the market. It's down significantly, and it's been a tough blow for my portfolio. So for some context, the Trade Desk is a platform that helps companies buy digital ads more effectively by using data to target the right audience across websites, apps, and even streaming platforms like connected TV. The company has been a solid performer in the past, but its recent quarterly results really disappointed the market. The Trade Desk had to delay the launch of its next-gen advertising platform, Kokai. The delay wasn't because of any major issues with the platform itself, just some user experience tweaks that needed to be made. But unfortunately, the market wasn't too forgiving. The stock took a major hit after the announcement. But here's the thing, I'm still confident about the Trade Desk in the long term. The CEO took full responsibility for the delay. Plus, they're still seeing some positive case studies with Kokai from customers who have already used it. If the company can turn things around, I think it will be a great opportunity for long-term investors such as myself. And in fact, Jamie and I have been buying more shares during this dip. But it's not just the Trade Desk. Block is down 36%, Lululemon's dropped 27%, PayPal is down 22%, Alphabet's down 18%. It's been a really rough 3 months across the board, especially for tech stocks. And unfortunately, I have a lot of tech stocks. Now, I've also been doing some buying this month. I invested when I got paid, as I do every single month. Plus, this month I happened to catch some good opportunities while prices are down. Here's what I've added to my portfolio. I've added £500 into my global pie, which is made up of 2 global index funds. 92.5% of the pie is invested in the SPDR MSCI All Country World ETF, ticker symbol ACWI, and 7.5% of the pie is invested in the iShares MSCI World Small Cap ETF, ticker symbol WLDS. I also added 400 pounds to the trade desk because I'm taking advantage of the dip, and I put 100 pounds into ASML, a company which creates equipment used in the manufacturing of semiconductor chips. Those were the purchases in my stocks and shares ISA, which I have with Trading 212. By the way, if you want to try it out, our viewers can get free fractional shares worth up to 100 pounds if they use code SNS bonus when they join Trading 212. This is an affiliate link, meaning we get a commission if you join, and that helps support our free content. Finally, I also put 1,500 pounds into the Vanguard FTSE Global All Cap Index Fund within my pension, which is with Vanguard. So yeah, it's been a rough start to the year, but that's the reality of investing. Sometimes you have to ride out these dips and stay focused on the long term. If you found this video useful, don't forget to like and subscribe. Thanks for watching, and I'll catch you in the next one.